The only problem we have right now is higher interest rates. Will interest rates come down? Who knows? Plan that they'll go up, and you'll be pleasantly surprised if they do come down, right? Because if you do buy a house at 7% and rates go to 10, well, that 7's all of a sudden cheap, right? And you did a really good job there, right? It's all about perspective. But if it goes down to 5, well, guess what? You probably got your house today at a price that's going to be less than if it is at 5, and you can just refi there, and you're ahead of the market that way.
Under all is the land, the real estate. Courtney and friends about to show you how to generate wealth. Get educated, do for yourself. Add a couple notches to your belt. Under all is the land. Under all is the land. The real under all is the land. Under all is the land. The real estate. Coming to you live from ACME Real Estate in Los Angeles, California.
Welcome to Under All is the Land, Season 5, Episode 3. I am your buxom host, Courtney Poulos.
Oh my God.
Here with my rock star co-stars, the lovely Silke Fernald. Hi. And the beautiful Dominique Madden.
Hello.
Hi, ladies.
Hi there.
How are you today?
Good. How are you?
I am killing it today. This morning has been intense, but I've been told I'm an intensity junkie. So
There you
just
go.
gonna ride that wave. Ride that wave.
I support it.
Okay. Surf the tsunami.
There you
I'm gonna
go.
get T-shirts that say that. Get
Well,
your real
that's what we're
estate
doing.
license. Learn how to surf tsunamis.
That's what we're doing.
Yes. Well, I'm super excited today to talk to the founder of Mortgage Black, Sam Batayneh, who has 19 years experience in the lending industry. So he's been through all these types of changes before. Of course, there are always new things that the Fed throws at us, and also, life and society throw at us that we can talk about, and new laws in California regarding ADUs and how do we finance those kinds of things. What's happening with the freaking interest rates? Inquiring minds want to know. So let's bring on our guest, Sam Batayneh. Hi, Sam.
Hi.
Welcome.
Thank you.
Welcome,
Thank you guys for
welcome.
having me. Appreciate
Yeah.
it.
Such a pleasure. Okay, so Silke and I have been wondering, is it intentional that all of your videos on your Instagram page start in the exact same hand position?
No. Not at all.
Okay, let's talk about your Instagram page.
Thank you.
And what is the handle?
Mortgage Black.
At Mortgage Black.
Yeah.
Okay, great. And you do like regular updates.
Yeah. It's called This Week in Mortgage is the show. It's every Friday. Just like to give my view on what I think is interesting and important. And sometimes things happen because of what you would think might be unrelated things, but they all play into the same thing. Like uncertainties in the economy will drive interest rates down, for example, which obviously has a huge effect on housing.
Yes, indeed.
So, and then what makes certain uncertainties out there, like this recent war that happened, for example.
For example, let's talk about the impact that's had on interest
I
rates.
thought it would have brought interest rates down a lot, and it didn't. They came down recently, but I think that's more of a coincidence. It wasn't a one-to-one correlation. I think
Has it had any impact?
it did about the first 8 trading days after, but then it went back up and recently has come back down because of the inflation reads that have been coming out there. Inflation's been tapering itself off a little bit, which was to be expected because
That was the intention of the policies.
yeah.
Yeah, of course. So how has business changed for you since these interest rates have gotten ridiculous?
Same as everybody. Slower, less appetite. This isn't, the affordability's not there like it was. We've entered into a needs-based market more than as we were discussing before, a needs-based market more than a want-to market. People are putting their house for sale because they need to. They're retiring, downsizing, relocating. Not necessarily because they want to, they need to. And the same on the buyer side. People's families are growing, people are relocating, people are life events occur. So they need to actually make a move as opposed to just, back a few years ago, if you loved a house in your neighborhood, you're walking down the street, walking your dog and you saw it for sale and you said, oh wow, it's for sale finally, we've been eyeing this house for 5 years, let's make an offer. You call your mortgage person, well, their interest rate, we've had a downward trajectory for
8 years or something.
well, really for the last 40 years, but I've been doing this, closer to 20. But since the early 80s, rates have been coming down. So everybody always can almost swap out their mortgage to pretty, there's been little blips up and down, but they haven't been extreme. Not like this. So there was always an opportunity to make, lateral moves for people, same square footage, just like this house, a little better than this house. No big deal. Now, the affordability isn't there, and prices are still very high, so your tax base is actually going to be reset to a higher place. So affordability is just not there like it was.
So what are you guys doing to combat that? Because obviously you need to make a living, right?
Keep working. That's it. What can you do?
You don't have any specialty programs or anything that are trying to offset these?
No, there's no magic. There's no magic, pill, bullet, however you want to say it. These are the times that, there's an old saying we've all heard, tough times don't last, tough people do, right? And this is one of those times in real estate where it looked to be too easy for a while to do mortgages, to sell and buy houses on people's behalf. And this is more of the other end of the extreme where it's really hard right now. And anybody who tells you it's easy just isn't even doing it, or just, not being, forthcoming with their words, because it is very difficult.
So you feel like underwriting has gotten harder in this environment too?
Underwriting it's actually become more realistic over the years. So I'll tell you, so back in 2008, 9, and 10, underwriting was very difficult.
I remember that.
Yeah, because we didn't really have a secondary market or a lot of stability on where to, keep selling the paper. Because this
No, it was there, but it was still recovering from the crisis, no?
Well, there wasn't a lot of appetite for mortgages back then.
Right, that's it. There were no consumers. Nobody wanted to buy the package mortgage deal.
On the secondary market.
Right.
There was not a lot of, investors because they didn't believe in the asset that it was tied to. Because back then we had negative amortization arms that the actuaries, I'll just call them, whatever the people are that set up the back room guidelines for the secondary market. They got it all wrong. They thought that, they thought that appreciation was never ending, and it would always appreciate at a 6 or 7% clip. And we found out it didn't. So there wasn't a lot of secondary market appetite, so you had to fit into a very, very tight box back then. But the difference back then is rates were on their way down. And if you did fit into that box, you got a good deal because there was not a lot of consumers, to your point, looking to buy a house because, the banks used to call it jingle mail. They'd get their mail and the keys would be in the envelopes. Banks used to get jingle mail. Well, those people that mailed the banks their keys are really regretting it now because the price of the house is now 2 or 3 times what it was, back then. So now underwriting is very vast. There's a lot of programs out there. We have the typical Fannie Mae, Freddie Mac programs that require tax returns, but back then there was no Airbnb income that you could take into account.
Right.
Now that, last few years they've caught on to that. ADU stuff is now, they've all caught on to that.
Can we talk about ADUs for just a second?
Yeah.
Because there are some recent California laws that are now allowing ADUs to be kind of cordoned off and sold separately, legally. How's that going to be financed?
As well, the interesting thing is they're calling it, they want it to be treated like a condo.
I've heard that.
Is what I understand. So a condo, you have to, there has to be a homeowners association established with the main residing party and the party that they're selling the ADU to as a condo. So
because it's still sitting on your land.
Right. So
the land doesn't come with the ADU. In this,
I
I thought you subdivided
theory,
your land too. No.
Well, a condo you don't even own the walls. You own the air between the walls.
Horizontal ownership, right?
Well, it's just you don't own the walls. The association owns the walls.
Right.
And you own the space in between the walls.
So the previous owner is still attached to the ADU, or like the current owner, if I had an ADU.
Put it this way, it's going to take time
that doesn't make
to
sense.
figure it out. Right. So there's going to be people that, so when one of my clients wants to buy a condo, we get all the condo information.
Right.
Right. And then we send it into the condo review department.
Right.
And they have to make sure that the budget's in line, that there's enough, money in reserves, that there's no lawsuits.
Right.
On all that stuff. Well, this is now going to be a two-party association, obviously, and they have to have their CNRs written up and all that kind of stuff. So they have to go to condo association lawyers, have that written up, and then that is going to have to be reviewed by, at the end of the day, what's most likely going to be a Fannie Mae or Freddie Mac type loan to be sold, to Fannie or secured by Fannie and Freddie.
But so then if so just in a worst case scenario situation, say I'm a homeowner and I've got an ADU.
Right.
Like, this sounds like a great idea, which it doesn't.
Right.
And I I create a HOA where I'm a member and so is the prospective buyer of my ADU.
Yes.
I still own the land, right? Let's say.
Sure.
Because if it's a condo, the owner doesn't own the land. The HOA doesn't, or does the HOA?
Well, okay. There's also.
What if I foreclose? What if I can't pay my mortgage on my main property? What happens to the asset for that guy?
Well, there's also a lot of like along the beach. There's a lot of folks out there that have a two-level building. Mm-hmm. One party owns one of the units. Another party owns the other one of the units, and they don't necessarily need an HOA. They just need some kind of operating agreement between the two parties. Mm-hmm. But this ADU thing has been specified to be treated as a condo.
Right, but I'm saying who owns the land?
The association, I guess.
Okay, so there is still, so it's like 50-50 ownership with the previous owner?
We will find out.
Okay.
Yeah, I mean, that's
Wow.
I guess
So
yet to be
it's
determined, because what if one person's, unit is 4,000 square feet, the other person's unit is 2,000 square feet?
Right.
Right.
Yeah.
Right.
Or you actually subdivide your plot and it's now smaller and then it has its own APN number and then it can be treated.
But
then you have
But that's not a condo, though.
That's not a condo.
Right,
but
but
I know that rule, there's
that's
a
what they're
rule
not
for
going
that
to
as
do.
well.
Oh, there is.
Now people are allowed to. I got a text message from this company called Backyard Vestor or something like that. Something kind of clumsy, but it basically said that they are looking for my clients because they want anybody who, California, they build tiny homes in their backyards. Basically, they said that they are looking for me to market their services to any clients who want to sell a portion of their backyard. So now it's like this.
This is going to turn into a big mess.
This is a mess already.
It
It's
is.
just a
doesn't make
concept.
sense.
It's a mess.
I thought with SB 9 and like the ability to subdivide residential lots, it had to be the owner, like the existing owner.
Yeah, the existing
Who could
owner
do
can
that.
subdivide the lot.
Right.
And then if there's a structure on that lot, then I would think it would be sold as like a tiny home, like a small single family on its own at the end. But that's not what the other law is talking about, selling ADUs as condos. I have to find
now
it.
is it condo literally or condo quote unquote?
Mm-hmm. Right.
Right. There's going to be some distinction that's going to have to be clarified here, because the way it's looking, if it's like if there's a building that one party owns one unit, another party owns another, they don't need a formal condo association written up. They just have like sometimes a joint bank account that they both contribute to, and you just show that exists and you can buy and sell that unit. But the reason this conversation is becoming the way it is because they actually use the word condominium, right? Condo,
right?
Which is different than just like a two-party agreement to run a structure.
Mm-hmm. So this says Yardsworth. We make 6-figure cash offers for backyard land via SB 9 subdivision.
Wow.
Now, is there a
That's
minimum amount of
interesting.
square feet that needs to be sold?
Oh God, who knows?
Right.
So
I don't know if there. I think maybe the use of the term condo might be
revised
Yeah,
later.
yeah.
It's so irresponsible. Who makes these rules? I mean, these are lawmakers sitting in our state legislature, and they don't understand the impact of the words they're using.
I'm sure the California Association of Realtors and National Association of Realtors to some degree give their
Influence
input.
that? Do you think that? Anybody who's a real estate agent, for sure, if they have realtors in the associations, which we don't totally know if they do or not, would know that calling it a condo comes with so much. I mean, wasn't it just this year or in the past year, that buildings that were previously FHA approved now have to all go through a reapproval process or something?
There's some of that. Yeah.
I mean, there's so much weight with condos, generally standards and all that thing, in order for them to be approved.
Well, here's the thing: we're not in a cash market. So if everybody was buying in cash, if all your clients were cash and nobody needed a mortgage, you could call it a condo, you call it whatever you
Whatever
want.
you want, right?
We're not in a cash market. I think half the homes in the country are financed or have mortgages. Timelines, who's owned a house for 20, 30 years, whatever. But and there's a difference. In California, the conforming loan limit, for a high balance in certain counties is $1.1 million.
Yeah.
In different parts of the country, you can buy a really nice house for $300,000.
Sure.
So, out here, there's going to be a lot more financing just naturally. So I think when they do make these laws and want to call something like this a condo, bring in, Fannie Mae, Freddie Mac, the FHFA, their regulator, the VA, the FHA, whoever it is, bring them in and consult with them, because there's so much financing that's required to sell these properties, because we are not in 100% cash
Well, that's
market.
what I was going to say. A big factor in whether or not a property is a good investment or not is what is your ability to resell the property.
Right.
I mean, that's a problem we have with TICs, tenant in common.
Right.
Limited amount of lenders actually do them. So
Yes.
I think it's going to land more in the TIC probably category as far as the lending is concerned, unless it's subdivided land with a structure on it and it resells just like a small home on a
Right.
small lot. But if it's actually going to live in this realm of co-ownership, or like two members of an HOA, or this land is not really owned by the person who owns the structure, then it's going to be more like a tenant in common situation, which has limited lenders and limited resellability, mostly because buyers don't all qualify for the financing to get it and don't always understand percentage-based ownership.
But
Like
I think
a
it's
co-op or
I don't think it's smart at all, because your main house is so close to your ADU. And what if your ADU is sold and you want to sell your main house, and then you have people be like, wait, I can't have this whole thing. I need, like, the ADU
Or what if
already
the people who
has
buy-
a different
I mean,
owner.
look, good
it'll
fences
lower
make
your
good neighbors.
it'll lower your value, and it'll lower your appreciation, everything.
None
It
of
just-
this is
it's
none
not a
of
good
this
idea.
seems well thought through. It just feels very
Well,
strange.
it's going to have to be talked about, and they might have to remove the term condo
Yeah.
from it. It might act more like a TIC, like you're talking about,
Yeah.
or like a co-op. There's not a ton of co-ops in California, but there are some. On the East Coast, they have a lot of co-ops, of course. But those, it's
Yeah, we have a few here. For those who don't know, co-ops are shares of stock in a corporation that's represented as your building. I used to own a co-op in DC, and there are a few in LA. There aren't that many of
Right.
them, but even those have specialty lenders and are difficult to resell, mostly because the HOA fees are very high, because they also include your taxes and sometimes utilities and that kind of thing. If you look at it apples to apples with a condo and you're paying taxes here separately, and it kind of levels itself out, but because of the either lack of understanding about value in the market or the lack of resellability because of the specialty lenders required, they usually resell for less than their condo counterpart.
well, and a co-op board has to approve you.
They do, but because of federal fair housing, co-op boards can only discriminate against you based on financial ability to pay the co-op fees. So usually if you're approved to pay the co-op, to pay the mortgage rather, you would be approved. But there's a process. Like, there's still a board meeting, you still have to sit there. I mean, I used to be on the board of the co-op in DC, and there's really nothing.
Could they sit there and judge somebody based on the industry that they're in and
They
say,
can't.
well, what if? But then real life happens, and they might.
But real life can happen to anybody at any time for any reason, and you still get mortgages. I mean, I could lose my job tomorrow, the day after I close on my house. So it's not about, it's honestly, it's one of the most tightly regulated. I think my hypothesis about that condo board thing is that it was a way for people to discriminate back in the day.
Sure.
And they literally so desperately wanted to avoid the impact of like the kinds of laws that were being passed in the 60s that they created a corporation so they could control who lives there. And over the course of time, the feds have gotten very clever to whatever was going on. And we had somebody in our co-op. This is a great story. Just another Courtney story, living in a co-op. I joined the board to be security for my building, because we had a person on the first floor who was bringing homeless people into the co-op, letting them sleep in the house, brought bed bugs to the entire building. There were tweakers with machetes in the lobby of my building attacking like people as they were walking in.
What year is this?
This is 2004 maybe?
Wow.
2005.
Scary.
In
I'm like,
DC.
yeah, in DC. because it's so hard to get people out. So one of the things about co-ops is that technically the board can vote you out of the corporation if you don't pay your dues, right? But because there's so much tenant, at which point you would become a tenant at sufferance. So if you're in a woke city like LA or DC, pretty much you can do whatever you want, and it's nearly impossible to evict someone. It's like the temperature has to be right.
But then
You have to give them a million different ways to come get out of it. So
it brings the value down for someone sitting with a machete in your lobby.
I mean, it does, right?
So you joined the board to be the security.
I did. Yes, I did. Which was, it's like banging your head up against a wall. There's a lot of crazy cat ladies on that board. A lot of people who are were like progressives from the 70s or just hippies, like, let the man be, like, he just like lets all people kind of thing. Like oh my God.
You're like, this is an unsafe environment.
It's so unsafe. I sat down there myself. I would monitor the security people I'm like, this is ridiculous.
so see that.
You imagine that. I mean, no.
Yeah.
It's so me. But I'm not the only horror story about sitting on co-op boards. It's literally like painful for most people. Condo boards too have a pretty bad reputation, but in tying it back to the ADU thing, if God forbid you're in an association with one other person and their finances are, a little funky, and I mean, it's just so. I just think tying yourself to a stranger in a one-on-one situation with this ADU law is just so poorly thought out. It's just so poorly thought out. So the person stops paying their mortgage, that thing gets foreclosed. Are you financially responsible? How do you get them out so you can go back to protecting whatever your interest is in this thing? Like, it's just sounds like a total mess.
It's just also such a final decision. Like, once it's sold, it's sold.
Yeah.
You can't
Undo
decide,
it.
Oh, I want my ADU now, I want to use it as a garage again, or something. You'll have someone walk past your kitchen window every time they get into their back house.
Naked.
Which
having
is
homeless people come over.
your house.
I think the use of the term condo's going to have to...
that has to go.
Irresponsible.
Maybe there's certain aspects that'll act like a condo, but it's not.
But how could it?
No,
Horizontal ownership, by its own definition, is like air. Like you were saying, it's airspace, right?
Yeah.
This has a structure. Like its own singular structure. I don't get it. I do not get it. So who's winning in this market from your experience with the lending? Do you have like a certain type of buyer who's like taking advantage of the lack of inventory and kind of using their smarts to
which
play
buyers
the
are
interest
winning?
game? Which buyers are winning?
The ones that have money.
Besides the cash offer.
Bigger down payments that can offset and they will just refinance later kind of thing?
Well, the whole refinance later thing, if somebody can tell me where interest rates are going to be tomorrow, nonetheless in 2 years, I tip my hat to you, because no one can tell you where rates are going to be.
No.
The way you look at financing is, so let's say you do a loan 30-year fixed today for 7%. Do a 30-year fixed and assume the rates are going to go up. So when I plan for my clients, I have to assume two things. The rates are going up and values are coming down. And if I plan for my clients and give them advice based on those two things,
I reject that.
Values going down?
Okay, keep
you
going.
You have to assume that, and I'll tell you why. So in 2008, back to my story then about the Neg M loans, they calculated wrong. They assumed appreciation would always be the case. Well, appreciation didn't happen. We had depreciation for a moment in time. So if you plan for your mortgage, assuming rates are going up and values are coming down, you can never get in trouble and lose your house. If you plan for your mortgage that rates are coming down and values are going up, then you're going to end up like Washington Mutual, Countrywide, and all the banks that went out of business and all the foreclosures that happened because of that. So those are the two things you do. So for somebody to predict that rates are going to come down.
We've heard it. We like it. We have heard it.
You've heard it.
Yeah, because can we talk for a second, because you're deeply into kind of the overall economic big picture. What role does housing play in the overall economic strategy of our federal government and of the Fed?
Housing, not in my estimation, housing is 30% of our economy.
Okay.
All the jobs created by it, throwing home improvement into that. Just housing itself is probably 30% of our economy. Now that's just dollars and cents. Housing in terms of, in my opinion, the general attitude and feeling of society is more like 70% plays.
Right, because we live in it.
Because you live in it, because it's like a sense of security, a sense of family, a
Status
sense of
symbol too. It's like one of those things. It's part of the American dream.
it is the American dream, right? From what we've been told, is to own a home and have that. But why is it the American dream? Is so you can have a place to call your own and a sense of stability and security. Now, when they started making it the American dream, I think was, when the soldiers are coming back from World War II, they did all of the
Normalcy stuff.
well, they wanted the
feeling of home.
the feeling of like
comfort.
security
Right.
of this, but nobody ever imagined that your home would be your greatest investment. No one thought that. Right?
Really?
I don't think so. Not in the 40s and 50s, because you could buy a house. I have clients that have owned their houses for 50 years. I have clients that bought houses for $40,000 in 1970. Those houses are worth $3 million today. Not in their wildest dream did they think that their house they bought for $40,000. They thought they paid too much for, by the way.
Right, of course.
That's
Right.
what literally everybody says.
Right.
Right.
Always,
Everyone
yeah.
I talk to, they're like, I thought that everyone told me I was crazy.
Well,
Right.
because, despite the fact that, maybe there are sometimes periodic downticks based on predictable artificial economic triggers.
Everything's cyclical.
Like interest rates go up, prices come down because buyers' affordability goes down. Whatever, you can predict then that prices will be down, but in the long run,
Yeah.
it always goes up. It does.
Right.
It always does.
Right. Well, and now here's the
Always.
thing.
Well,
Values are safe now more than ever because there is no inventory and and there's only so much builders can build because everything's so expensive. So right now, counterintuitive to what you just said and what we've thought all along is when affordability goes down, values have to come down. Values have moderated.
they will, though. Let me put
Come
it
down?
Yeah, a little bit because
A little
I know
moderation.
who's selling right now are people that have a lot of our clients, for example, who are in renovation space. Whenever they bought, the predicted value was here, not anticipating the hike in interest rates 2 years ago or whatever. And now, obviously, in order for them to break even or make money, they have to sell at a certain place, which is keeping those values high. But anybody who's buying right now is buying knowing that in 2 years, the resale value may be a little lower and they're getting a better deal on the buy side now to allow themselves the flexibility to deal with the price, a couple years from now. So even though it takes time for markets to adjust, and so we're still seeing a leftover of stubborn sellers who really need a price in order to get out of a project, I think that's going to
Well, you're talking about speculators and developers.
well, yeah.
Right.
We do have to predict market value, so there is some speculation.
Right, but that's
in
not the majority of the market. The majority of the market is a user-based market. Most people buying a home are using the home for a vehicle as a shelter or an investment to rent it out.
In LA, though, kind of like, our grandparents or maybe our parents, they bought houses and they intended to live in them for the rest of their lives. Like the 30
was the
they
plan
might
back
actually
then.
pay off their 30-year fixed rate loan, right? But just like when you got a job, like you'd stay at the company for 15 years and you never consider moving. This moment we're in, it's like people buy anticipating being able to resell within 5 to 7 years, make profit, buy something else, and and just like with jobs and that kind of thing. So I do think on some level, and I have been asked by clients many times, what do you think I'm going to be able to sell this for in a couple of years? Like that is part of the
That's hard to
decision-making.
predict.
Of course, it's impossible.
That's
to
hard to
predict.
predict, and to even begin to try to give an answer is just
Foolish.
throw a dart at a board.
Yeah.
Right. Could be a little more. Could be a little less. Could be the same.
But there's data to support
That it's going to be more.
that it's going to be a little more.
Yeah.
But we don't know what the
So when I started in the business, the average mortgage had a lifespan of 7 years.
right.
Okay, so whether it be because the home was sold, they refinanced, whatever the case was, it was 7 years. That was 20 years ago. Now, I'd say maybe 5 years ago, the average mortgage maybe had a life of 3 years, 2 years.
Wow.
Because
Right.
we've been refinancing people, right?
Right.
But now, because such a huge percentage of the population is locked into a 3% 30-year fixed,
They're not moving.
the average mortgage life went from 7 years 20 years ago to maybe 2 years 5 years ago to now probably up to 20 years.
Yeah.
Really? 20?
Right, which actually makes it so it's a good annuity because all these mortgages is a contract, a piece of paper. It's an annuity for an insurance company to invest in or a big company to invest in. It's just paper. It's just a contract. So forget about the collateral it's tied to, which is the house, which is the safest type of collateral to tie it to. And that's why the cheapest money you're always going to be able to borrow is going to be on a home, on a structure, because it's considered to be the safest. That's actually a very good contract now for a big insurance company to lock in money at 7% for the next 20 years, where they a few years ago, it kept turning over, right? So you had to keep up with the secondary market, and if the pool of loans you bought all got refinanced within a year, well, you had your money back and you had to reinvest it. So it was like this race to the bottom to keep buying these mortgages. Now, if you're holding 7% paper, if you're holding 3% paper, that's never, you're always going to get that 3%. Is that 3% good enough though now is the question.
Right, because now you can put your money somewhere else and make more.
So the average age of a mortgage now will probably go up a lot because of the 3% mortgage. People are going to hold on to that as long as they can. I call it mortgage love. Because you might not love your property, but you're going to love your financing. So it's going to be really hard to sell any property that has that financing tied to it.
Right.
Which is actually turned into an asset. If you think about it, a 3% mortgage, which is a monthly liability, is now an asset to you in your overall global perspective of your life. Because if you were to go try to get fresh money, it'd be at double or more than double in some in most cases.
Yep.
So now a 3% mortgage, which is a monthly bill, is now an asset if you think about it like that.
Right. So when you also take into account, even if you're living in a property for a couple of years and then it no longer works for you, you've paid down your principal, and now if you rent it out, your tenants are going to be paying down your principal at an even greater rate than you were,
as rents
so
increase.
You hold it onto it as an investment property as opposed to reselling it because it makes more sense financially too.
Yeah, it's one of the rare times where you see a monthly bill, a liability, be a huge asset to you, which is when your money is, less than half of the money going out there.
Debt as an asset.
Yeah.
That's how smart people use real estate.
Yeah. Well, that kind of debt is, you can't sell. You can rent it out.
Yeah, you should rent it out.
Yeah, you should rent it out.
You can sell, but you're not. You'll have a better benefit if you hold on to it.
Well, if you need to buy a new place, you can tap the equity.
Right. Are you doing a lot of equity loans?
A ton.
Yeah.
A ton. So people call, for my whole career, people have been calling, hey, ran up some bills, credit cards, this, that, this, want to pay off these student loans, whatever it may be. Again, we've always been able to make a lateral move or just maybe a slightly higher move on a cash out basis on their mortgage because the market's always been, coming down a little bit, just little blips up, 0.25%, 0.5% here, but nothing ground shaking like it is now. So now when somebody calls and I blend the ratio, if somebody owes $1 million at 3%, they need $200,000 to pay off credit cards. If I do the blended ratio, their blend is still so much less. I can't refinance them and get rid of that 3% loan and have the tail wag the dog, 20% of the money in charge of 80% of the money, whatever the ratio is. So now we do a lot of equity lines where we used to do cash out refinances and consolidate the whole thing. Because you always get cheaper money on your first trust deed mortgage than you will on your equity line. Typically been the case.
Yeah.
Yeah.
Well, I know for a lot of our clients, like looking for the solution to the equity issue is, to be able to move up because life does happen and you have to move, but it's like you want to make as much money as possible on the house that you bought. And thankfully in Los Angeles, people do want to live here. And I think that real estate's always a commodity, but how much profit is the question. And are you buying and selling in the same or a more advantageous market, which is what you ideally want to do. For you, with using Instagram in order to kind of like get your face out there, do you feel like you get a lot of leads from Instagram? Are you using social media more than you used to now in this post-COVID environment?
I've been doing social media. I should have been doing it for the last 10, 12, 13, 14. I don't know how long it's been around, but I've been doing it pretty much since 2017. So I think it's been 5-6 years now, whatever it is. The thing I find about social media is I just want to be consistent. I think that's the most important thing. So it's, our business, because there's a lot of competition, whether it be, the mortgage side, the realtor side, whatever side of it is, there's a lot of competition. We're in the out of sight, out of mind business, right?
Right. If we don't need you.
Well, if you can't see you, there's people. In my opinion, we take in so much more. We take in more data now in 1 week than we did in 1 year, 25 years ago when I was, a kid. There's so much information just thrown at us now, right? That you could back then maybe see, an ad for a mortgage person once a week, and then that's the last one that stuck with you. Now, if you just go on your Instagram, you're going to see 10 mortgage people in 5 seconds.
Right.
So
I just
true.
want to be the last one you saw. So if I'm consistent, the odds of me being the last one you saw are better than if I'm not consistent.
But
That's a
do you
great way
find
to
that
look
it's
at it.
generating like inquiries?
Of course.
Yeah.
Yeah.
So it's now like a key component of your marketing plan.
Well, I think it's a key component of every company's marketing plan, not just mortgage.
Well, I mean, I think people have competing agendas on social media. Sometimes it's for authority, sometimes it's for narcissism, sometimes it's for
Well, most
lead
of the time,
gen, you know.
most of the time it's for narcissism.
You think so?
Oh, absolutely. I don't care what somebody ate for breakfast that day.
You don't?
No,
Why? You aren't fascinated by their food?
no, not at all.
Shocking.
I think food is the lowest.
How do you feel about cats?
Yeah, I like cats, but I definitely don't need to see what somebody had for dinner last night.
There was a time whenever people said if you just put hashtag cats, you'll get more views on any post that you
Cats off
you're posting.
Instagram.
Yeah, because cats are just like always killing it on social media. Anyway,
No,
They are.
You see companies that have been around hundreds of years that are on social media paying sponsored ads.
yeah, because I think behemoths, and also just from as a company that is using social media, you don't have social media is really created for a unique individual voice, I think, as opposed to a corporate voice.
Well, before
and
you had to have a lot of
corporations
money.
now have to create the voice.
You used to have a lot of money to have a voice, whether it be on TV, radio, or billboard.
Right. Yeah.
Now it's free.
It's free. Well, yeah, sort of, unless you boost your ads, whatever,
Yeah. But I mean, you can
and produce the content.
Yeah, but you can, in theory, just
Post whatever.
post whatever, and it's
Yeah.
free. And based on your content, if people like it or not, you could be more powerful than a company that's been around 200 years and spent billions of dollars on advertising.
It's a reality.
Yeah.
It really is. It's
Yeah.
all perception now too.
Yeah, in a lot of ways, it's leveled the playing field.
Yeah, for sure.
Yeah.
To wrap up, I have just one big question. Of course, you guys feel free to jump in, but I just want to know, are you optimistic about what's going on in our market and the lending?
Yes, because this too shall pass. Now, if you went through 2000, if you're a new person in the real estate industry that started a year before COVID, where the market was kind of just normal, it was just a moving market, right? Some needs-based stuff, some luxury stuff, like, oh, I really like the house, the dog, walking the dog example, the neighbor's house, you'll buy it, because rates were sideways. You saw what like a normal market looked like in 2019. COVID turned it into this unrealistic market where everybody could afford a $3 million house. That's just not realistic. That's not real life. And if you went through 2008 and 9 and 10 for some parts of it, where the sky was literally falling, where we were submitting loans to banks
That we're going broke
every
at
Friday.
the closing table.
Right,
Yeah,
right.
I remember that.
Literally, the government would go in and seize a bank on a Friday night. We submitted loans to banks, and I'd have to call my clients on Monday morning saying, hey,
So sorry.
Bad news.
there was 8 banks left. Now there's 6 banks left. 'Cause- and we just so happened to send your loan to one of the two that was seized on Friday night because they had the best interest rate.
Right.
That's when the sky was falling, and it literally was falling. Now we've got money sources. We've got different, DSCR loans
Right.
on investment properties where you can underwrite a residential property like a commercial property and have the majority of the weight of the underwrite put on the property itself.
Right.
You know what I mean? Some stuff about the client, but the income piece, which is the main piece beyond that. There's cross collateralization, foreign national loans. There's a lot of different loan programs now. The only problem we have right now is higher interest rates. Will interest rates come down? Who knows? Plan that they'll go up, and you'll be pleasantly surprised if they do come down, right? Because if you do buy a house at 7% and rates go to 10, well, that 7's all of a sudden cheap, right? And you did a really good job there, right? It's all about perspective. But if it goes down to 5, well, guess what? You probably got your house today at a price that's going to be less than if it is at 5, and you can just refi there, and you're ahead of the market that way.
Right.
So the way I think about a home, especially your primary residence, it's a utility at the end of the day, because you have to have a shelter, you have to live somewhere. You're either going to pay rent and not build any wealth in that rent, and like you were saying, pay somebody else's mortgage,
Yep.
right? Or you pay your own mortgage, and regardless of appreciation or not, you've got an opportunity to gain in the future. But if you're renting, you will not have that opportunity.
Right.
You're just going to be renting forever. And I saw this meme running around Instagram. Oh, if in 1971, if you waited for rates to go down, you would have waited till 1993 for rates to go down from
Yeah, I saw that.
1971. But during that time period, the value of homes, doubled or tripled or quadrupled, and I think that's accurate. And I think that's more accurate now because the cost of building is so high. So just like we were saying, that a liability, which is a 3% mortgage because you have to pay on it, is also some people's now's biggest asset. So I think home ownership is always an important thing, not just on an everyday basis, but as a feeling as a person and a consumer.
Right, the intangible. It has
Right.
value.
It has a value. So I think things will be fine. Things will be fine. It's just because the market hasn't stopped.
Right.
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 You would think if you would have asked me what if rates went to 7 when we were doing 275 30-year fixed, I would have said, there'd be no real estate market. Well, guess what? There is.
Right. Because people
Well,
still can't
yeah.
afford to buy a house.
Well, and
They
people
still
need
it.
houses,
They need
and that's
it.
the reality. And the reality is too that the money is easier to make for a lot of people now than it was. Like the market is more global. It's easier for people to find different avenues to make money. So I think a lot of people are looking at the economy in a prehistoric way, like a pre-technology way, a pre-social media way. Where now, especially like the new generation who's literally being taught coding in school, they're going to come out and they're going to be on top of the world riding the tech, the tech hike. So really the asset is the most valuable thing because the value of the dollar is going down. And as the money's easier to make and they keep printing more, it's the land that, that we really don't have more of.
You
and the
mentioned
building
something
that's gonna be
global.
less.
There's certain cities in our country that are global cities, LA being one of them, San Francisco being one of them, New York, Miami. There's certain places where people from all over the world are going to want to own real estate. This is one of them. That's always going to boost a market.
Yeah, everybody wants to live in LA.
They sure do. It's for the sunshine and the tatas. Anyway, that's this episode of Under All Is the Land. Thank you so much to our guest, Sam, and we will see you next time.
A couple notches to your belt. Under all is the land. Under all